got it through OBS, and then I'm recording it also through Zoom, so no worries about that. Good trading week for some of you guys. Okay, good. Let me check out the Discord as well. Yes, I do have the Zoom link. I'll drop it in the Discord chat too as well. Good week overall. Yesterday was not the best. Yeah, we'll talk about, I do want to talk about yesterday. So that's going to be kind of the first topic, is going over a little bit about Friday, Q's, AMD. If you guys watch my trade review, it might be, I might talk about a few of the same things, but I think it's super important. I do think it's, there's some really good stuff I want to go over in terms of AMD yesterday with QQQ. So we'll run through that just real quick. Then we're going to kind of transition into some small account strategies, how you want to grow a small account, and then just about overall game plan, do some time frame stuff, and then do general Q&A. So should be good. So I got that recording. Everything should be all good. Okay. Yeah. Sounds good, guys. Yeah, I'm gonna have the Discord up. Let me just send the Zoom link in the Discord chat too as well, and then we'll be good to go. Should be all good. Yeah, if you guys want to, it's also in the admin trading floor, so I'll just forward that into here. Okay. Here is the Zoom link for you guys that want to do through Zoom. Okay, let's get started up here. 10:03. So let's run to just the lower time frames. Looking at QQQ and AMD yesterday, and I do want to talk about kind of Jack and some of his trades and kind of the main idea from yesterday, and potentially some of the trades that you guys took as well. It's going to be what I kind of want to talk about first. So coming into the morning, there was a very strong bias for AMD to the downside, and I think we did kind of touch on it a few times in the live trading, and also just if you joined some of the coaching sessions or potentially you were in Traders Lab. So looking at QQQ and AMD, I'm just going to load up the drawing tool here. We have a major gap to the downside, huge daily gap to pull into. We are trading below your previous day low. We're trading below some of your major key levels in terms of the support right here. Also, overall trend, if you take a look at the 4 hour, or if you take a look at the 1 hour, or even 15-minute. So a lot of these time frames align, and we do have this major gap to the downside. So this is what I would consider one of these A+ setups. This is what I would consider an A+ setup in my book. Knowing this and having 7 years trading experience, I'm talking about Jack. For me, it's close to 5 now. Essentially, you know AMD is going to break some of these lows and pull back into that gap. It could be, intuition, could be also, just overall market experience. Trading for 7 years, you kind of know these moves are going to happen. I think that's potentially why Jack took a lot of those trades yesterday, and I think it was mostly AMD. Also, I think, I'm curious, I'm not sure if he traded NVIDIA too. More importantly, I want to go over some of these low time frames, and I want to kind of mention where the best entry was in my eyes and why. I think this is super good topic to go over. Very important. So taking a look at the first 5 minutes, just solely the first 5 minutes on AMD, we do have sort of a range setting up. We do have the open candle and then some lows here as well. At this point, we have not broken below your previous day low. When we look at the 938 candle, we have broken below your previous day low. Just keep that in mind. When we take a look at QQQ and we take a look at the opening range, your 938 candle, we have not broken below your previous day low yet at all. We still have this range right here. We still have this previous day low as support. Okay? Just making that clear, 938 candle where you're still in range for QQQ. AMD, at this point, we have broken below your previous day low. So taking a look at just the overall indices and also AMD. So at this point, I do know that AMD is technically relatively weak in terms of just like intraday price action, right? You can look at the higher time frames and it is obviously pretty weak, but also intraday on the 1 minute time frame where we take most of our trades. So in this case, the pullback in the entry we can go over. Technically speaking, it is just kind of your previous day low. You can look at some of these wicks here as well. Technically low of day retest, technically previous day low, technically your 5 minute range. A lot of confluences here. But I want to go over some of the other entries potentially if you entered a little bit later into some of these candles. So essentially, let's take a look at your 939 candle. We'll take a look at this. Your 939 candle did form a bottom, right? We have an overall trend. Bottom, bounce, and then overall trade to the downside. 939 candle. Let's take a look at your QQQ now. Oops. 939 candle is when or 940, I guess we should say, we did end up bouncing off of your previous day low. So this is the first pullback into the level. If I also load up the indicator here, let me load up this. This is your first key pivot into some of that support. And this was the level drawn on the 15-minute chart, by the way. If I need to go over it, I'll just do that real quick. This was essentially just a wick to body. I drew out something like this. This is where most buyers are stepping in, right? This is the main idea here. Also, a key level on the higher time frames if we look left. So, I believe this was actually a regular trading hours level. This one was pre-market after hours, so I'm not going to use this as much. But this is the key pivot for the trades on Friday, right? This is the main key level. So going back to the low time frames, and we take a look at your 946 as well. So this is the major area where most buyers are going to hold QQQ above. And if we go over to AMD at 946, same idea. This is where we bounce. And we have a huge push back up into your previous day lows. So knowing this and trying to short tech, like most of your, high cap tech names, mostly, AMD, Nvidia, Tesla, Google, Palantir, Amazon, Meta, all of these names are going to move relatively similar to QQQ. Not going to say exactly because obviously every ticker has their different personalities, but trying to short when we did have a pullback into that key level is going to be pretty difficult, right? It's going to be pretty difficult. So this is the first kind of break of structure in terms of your opening range, and it was straight into your key level for QQQ. So it was a little bit tougher there when we actually went right back to high of day. So a little bit tougher. And now my whole point of this kind of small recap / conversation here is that AMD broke below your previous day low on your 938 candle before QQQ broke below your previous day low. So that entry before it broke would have technically been a little bit better in terms of trading relative weakness, aside from waiting for it to bounce, right? So that was kind of the main idea I wanted to talk about just in terms of that conversation. Does that make sense, guys? I just want to get a quick just pulse check in the chat. I just want to just make sure everybody understands this. And we can go over and we can talk about a lot of reasons why you potentially got stopped out, where your risk was, all of the above. Technically, we don't know, we can't predict anything. We don't know how the markets are going to move. But just overall looking at some key factors. When you're looking at your trades and when you're going to review your trades, you need to be looking at some of these factors. not exactly being super specific, right? Not exactly being, candle to candle exactly, but the more context you have and the more you look at potentially QQQ and the name you're trading and the overall bigger picture and the low time frames, it genuinely does help a lot. It does help a lot. When you're back testing, when you're taking a look at some of your trade ideas, it is basically, those are key factors to play in, right? And I know yesterday was very tough, and I do want to kind of run through a little bit of why some trading days are technically harder. So I found a pretty key, like I do a ton of these like coaching sessions. Some of you guys are pretty familiar with them, and every single time, I'm this is not an exaggeration. Every single time anybody sends me a trade when QQQ is not broken out of your like 5-minute range, it tends to always be a losing trade. And we do have days where we have an overall trend with QQQ right off market open. Then we also have days where right off market open, we don't have an overall trend for Qs. So until 9:45, right? 15 minutes exactly, we didn't break out of that opening range. Barely even your first candle, actually. Barely even your 1-minute range. So I want to kind of run through some of these days, and maybe you can take a look at your journal. Maybe you can take a look at some of your trades that you took this week. I'll literally just use QQQ for reference right now, and take a look at some of your trades that you took through Monday through Friday. So Friday, obviously QQQ didn't really break your opening range until 9:45. Didn't really have an overall direction, and even then we were basically trading right into your support. So very tough to take trades into here, right? You don't really have an overall direction until we got a good displacement candle below it. So that was kind of the major idea there. 10:30, right? If we take a look at Thursday, right? I know Thursday was pretty tough too. Look at the opening. My arrows are horrible. Jack's a little bit better at this than me. Even Thursday, definitely a tougher day. Thursday and Friday were probably, more of the tougher days to, take a position inside your opening range. And then we take a look at days like Wednesday. Very, very clear. Opening candle. For even your first candle, not even the 5-minute range. Your first candle, you have a strong overall trend. You're going to be trading to the upside. Very easy to see. Very, very, very easy to see. So you guys can do with this information what you will. It's not too difficult to play this in real time either. What you don't want to see is essentially, a barcode forming in your first 5 minutes. That's essentially the main idea. And even on the names you're trading, right? Like even on the names you're trading, not just QQQ, if you're trading tech, but also just some of the names in general. Take a look at Tuesday. I think Tuesday was a little bit tougher, but we did have a clear break. Not only your opening candle, but also, your 5-minute range, your low of day. So a little bit easier to take shorts. Let's look at Monday. Monday we opened up, had an overall trend. We did form a top like fairly quickly here, so it would have been a little bit tougher. But these days, the overall direction is very, very easy to kind of spot versus days like Thursday and Friday. And typically your win rate is going to be higher. So again, kind of the whole point of this conversation is going to be using this in correlation to kind of take a look at some of your trades. Use this as context for some of your trades. And if you're trading more so like mid caps versus like Nvidia, it will technically be a little bit different, right? Because like not QQQ holdings definitely does depend, but it is a good sign of the overall market, right? QQQ and SPY. You could use SPY too, by the way. You use QQQ and SPY because most of the times those are going to be kind of like the leading factors where people are buying, where people are selling. So I'm just going to take a look at the chat real quick. Haven't gone over it yet. Just make sure everybody's got it. These are the ones I love. The quick reversion. Yeah, 100%. 100%. Yeah, I'm going to go to... I'm going to take a look at the AMD in a second as well. Can't see the lines as arrows as you draw. Can you guys see this good? If I draw this arrow here. Really? Okay. In Zoom, I think you guys probably can. Okay, let me fix that in the Discord. In the Zoom, can you guys see that? You can see them? Okay. Okay, sounds good. I'm gonna fix that in Discord real quick. My apologies. It's probably because I'm sharing the, no, it's okay. You guys don't have to switch to Zoom. I'll just, I'm gonna stop streaming and then I'm just going to share my screen. I just have to share the window. Sorry, I was sharing the actual tab itself, so. Window, entire screen. Should be good now. Yeah. So in the Discord, let me know if you guys can see this now. Just a quick drawing tool. Okay. Sorry about that, guys. I didn't even know. I honestly wasn't using it too much. There was some points where I did a few, but I think the overall context was there. I think you guys got the idea. So I have a good question here. Were you okay with the trading stop loss if all QQQ reversed with the liquidity grab, since you held even after break even was broken? So you guys know, like, all of my trades essentially, if you join the coaching or if you're familiar with some of my trade reviews, typically after every single take profit gets hit. So technically this is my first TP into this candle right here. I usually go break even on these trades. I usually just stop out break even. In this context, in this trade specifically, it does make a lot of sense to hold on to it. And I did kind of go over some of the key factors in the first few minutes of the session. Essentially, we are below 90% of your key levels, and we have a major gap to the downside. This trade was like essentially A+. So I did kind of want to give it a bit of room. I know if you traded zero, by the way, I know if you traded zeros on AMD, it was definitely a little bit stressful. And I can say that myself as well. And I will give you guys just context. This was 25 contracts that I took on this trade. This, on your 946 candle, it was about around 1,900, I think, or $2,000 P&L. I took off 15 contracts here. I took off like 15 contracts. By the time it got up to break even, it was like a $100 P&L. So it was definitely a little bit tougher to hold. So don't beat yourself up if you know the contracts move more than you'd like. I did have some good key. I did have a good conversation yesterday. Obviously the IVs were like really high, as well as they're just gonna have when you trade zeros in general, but also IVs were a little bit tough. If you were on a small account, trading zeros is not exactly the most friendly thing to do, and we'll talk about that now. We'll kind of go into a little bit of small account strategies. So go over some questions just real quick before. 5 minute is the 5 minute break on QQQ. What's up, Eileen? Is the 5 minute level break on QQQ better than 15? Any key, like, essentially what you want to see is just a trend, right? So like your 15-minute range and your 5-minute range, I like to picture it more as your high of day and low of day. So let's just kind of go over something real quick. In terms of when you want to trade your opening ranges, typically it is best when you have, like, you know, your opening candle. Let's just draw it in green. And you have some sort of trend form, either to the upside, and then you make a low. What I'm looking for is essentially your first high of day and your first low of day. And this is your opening candle here. Wherever a price goes after this is typically going to be the best setup. So this could be your 5-minute high. This could be your 15-minute high. This could be your 5-minute low or 15-minute low. Typically, waiting for this is going to be a little bit easier to spot, because we talk about 5 and 15-minute, but typically what I want to look for is just high of day and low of day. I think it's a little bit more clear. And even for your opening range setups, this is going to be way more higher probability, right? Because if you have 5 up close candles, 5 up close candles, just like this, and you draw out your 5-minute high, or even, let's just say you have a red candle in here, and you draw out your 5-minute high, and price keeps going higher, well, this is great because it is still technically your 5 minute like candle. It is still that like candle where that was the highest point, but I do think the trades are technically a little bit better if you actually form a high right here. So in this case, this is not really forming a high. It's just technically a time level. It's not technically a high of day. So looking at something like this would be a little bit better because we actually had sellers. And if you guys know, like obviously the break and retest, what our whole strategy is based on is support turning into resistance and resistance turning into support. So technically speaking, this is the last level where sellers were. This last high. So when you take a retest off that, it's going to typically be a little bit better. Hopefully that makes sense too. I think that's pretty clear. I think most of the trades are better when you look at it in those terms versus just strictly looking at your, 5 minute level specifically. Those are the better trades. You can still use obviously the 5 minute range is good. Obviously you can still take those trades. I typically think they're a little bit of a higher win rate in terms of overall context. So sweet. Okay, I'm gonna go over. I have some questions. I'm just gonna run through just just quick elephant in the room question and stuff that I really want to go through, and then just about trading on a small account and some key aspects that you guys want to take advantage of, and then I'll probably go through. I'll run through like all the questions that you guys have. I can even take a look at some of your guys' trades. I can talk about game plan, thought process, psychology. I can talk about whatever questions you guys do have. Had a super solid session yesterday with some of the one-to-ones, so I do want to kind of touch on some of those points too. Eileen, Davina, you guys were in there. That was a good conversation. I do have some key points that I kind of want to go through from there as well. So as for trading on a small account, let's talk about some key factors, and let me just get a clean chart right here. When you guys are trading on a small account, there obviously there is a very big difference between trading 1 to 2 contracts versus like 10 plus. A very big difference, very big gap between these two. Not only just your risk, but just how you want to play some of these trades and how you want to adapt essentially your strategy and your game plan for some of these trades. So we have to talk about this because I think I've talked about it a few times, but I do think it's very important, and I have some other good key aspects. So in terms of your trades, typically, I'm going to refer back to this chart, by the way. This is a very common chart. This is literally from TradingView, I think. We talk about this quite often. I did talk about this in the Trader's Edge sessions too, but essentially where I think most people are throughout the accelerator, throughout some of the people in Traders Lab too, mostly in this spot. I think most people have this like 1-to-1 and like 50% win rate. I actually don't think that anybody, I haven't actually talked to anybody that is like typically below 30-ish% win rate. I don't remember the last time I have. Typically everybody is around 40 to 50%, but their winners are way too small. Way too small. And we have to kind of address this a little bit. Just gonna get a sip of coffee here. How you trade has to be relative to where your account size is and how many contracts you are trading. If you try to kind of mimic the same kind of like, I guess, scaling strategy as Jack and Tony, not the entry models, because we have all the same entry models. That's what we teach. That's what we tell you guys to trade. But the kind of the scaling strategy, kind of have to adjust this a little bit, right? Because typically you will see Jack and Tony take a lot of risk off at like 1-to-1, right? Typically where high of day is, right? If there's a key level of resistance, or maybe it is a setup where high of day you don't have a good risk reward to, then it does make sense to kind of take some off, right? If you have like, higher, not even higher size, but just more contracts. It's all based on risk, obviously, but also just the amount of contracts that you have. So typically, when you're trading with 1 or 2 contracts, in my opinion, that you could argue this maybe, if you were anywhere in the range of like 1 to 3 contracts, I typically don't think it's a good idea to scale at all. Kind of, like, I know some people trade with 2 contracts, maybe even 3, and you want to kind of adjust some of the scaling. I typically don't think it's ideal. 3, I kind of understand because you have maybe 2 at high of day and then 1 runner. Makes a little bit more sense. We can talk about specifics. If it's a really good setup, it makes sense maybe. If it's just an average, average trade, which you don't consider A plus, then it does make a little bit of sense, or it doesn't really make much sense to do scaling, because your average trade is going to basically be a small win. And the one contract that happens maybe 3 out of 10 trades, maybe, that you do take off at some other higher time frame key level, I don't think it's going to make too much of a difference in your overall weekly and monthly P&L. Unless you're like really holding on to it, right? If you're like really letting that contract ride, and then maybe it makes sense, but typically it's really hard to do that. I genuinely, even for myself, like when you're holding those contracts and they're going up like 50, 100%, it is technically, it's pretty tough to hold them. So I typically don't think that you should have many scales, not really any at 1 to 2 contracts, but with 3, even then, very rarely. Very, very, very rarely. And the reason being why you kind of have to aim for these higher risk reward trades is because on a small account, you don't really have the option to let those trades run, right, to go higher, right? Typically, like, when we do our trade reviews and we look at entries and scaling, a lot of people take off risk right here. But if you were trading on a small account, you have 1 or 2 contracts, you're not really getting those extra juice and those extra scales up here to make up for a lot of these losses. It doesn't make much sense, because when you're taking off risk at like 1 to 1, and I understand the psychology aspect too, by the way, of obviously taking off some risk when you're in profit, and if you've had a couple bad trades, hopefully this makes sense. I've talked about this a few times. Hopefully this makes sense. But you kind of have to switch it up a little bit if you're trading with lower size. You kind of have to go for like the 1.5 minimum, because that way, if you're at, which most people, I talk to a lot of people in here, by the way, most people are kind of at this stage, maybe slightly in loss because of this, though. Not because your trades are bad. Like, honestly, most of the setups that I look at are not typically bad at all. A lot of the entry models, a lot of the technicals, overall thought process usually is never that bad. I'm just being honest. So you guys send me a lot of trades. I look at a lot of them. All of them are pretty good. I'd say 80% of them are pretty good. But what I think most people do struggle with is actually just holding on to the position. So we'll kind of dive into the psychology of this a little bit, because this is like, it just needs to be talked about. I kind of talked about it yesterday. One first thing I need to kind of mention is, like, if you are learning trading, or even if you are getting consistent, if you're trying to improve as a trader, 100% you should never be trading with money that you can afford to lose. That is the first thing. I think most people do understand that. I think most people are pretty good in that aspect. That's like a pretty big no, because you will just essentially make bad decisions. It is what it is. There's no real psychology trick to kind of get away from that. But when you're learning and you're taking these trades, you're playing them a little bit differently. In terms of, like, I guess ego, this kind of sense of, like, you kind of want to be right. We can talk about that too. Also in terms of how this affects long term. So most people, this is a good conversation too. Most people think that if you just want, like, so let's just say, for example, Monday through Wednesday you lose a couple trades and you're like minus $200 or whatever. It doesn't even matter the dollar amount. And then on Thursday or Friday, let's just say you want to make some money back. You technically close a position early. You take your whole position off. Maybe it's at like 1 to 1. Maybe and on the contracts or on the underlying. Not everybody trades options, but for the most part, we trade options. In this case, you need to understand that is actually the worst thing that you can do. It is the worst thing that you can do. Taking these small wins when you are in drawdown on the week, like let's say, you have those 3 losing days, when you take off risk and when you take profit early, it actually makes those weeks and months worse. I would rather you take a loss on the trade versus scaling out early, because with your data and even some of our data that like a lot of these retests and a lot of these trades will work out, whether you've done back testing, whether you look at your journal, whether you look at your win rate, your risk to reward, pretty much, like, I mean, you're pretty confident, right, when you look at data, that the trades will work out. So if you know that and you're taking off positions early, you're never going to have that actual true data be presented. You're never actually going to have those trades play out. Hopefully that makes sense. You're never going to have that option. The data will never work because of your decisions. And over a long period of time, like the trades, like how you're going to be profitable, how you're going to navigate through the markets and your account size, is letting the data work for itself and basically having this mechanical mindset versus trying to make money every single trade every single day. That is a bad mindset to have, trying to win every single trade. It just is what it is. Losers are part of your system, right? Like you're gonna lose some trades. It is what it is. Like I lose trades. I do, like it has to happen. It is what it is. Nobody's perfect. But you close these positions early because you want to technically make back some of those losses. If you do that over a long period of time, the data, like you can run the numbers yourself. I think most people do understand this already. Go run the numbers yourself. Look at your win rate. Look at your risk. Closing those positions early is actually, it's worse than maybe even letting it go to your stop, based on your data, based on that. So very good conversation to have. I think most people, if you do have that general understanding, should help a little bit. Thinking more long term. I touched on this yesterday in a few sessions. Think long term, right? Don't think day to day. Don't think of every single trade as you need to win this trade, right? When you guys do back testing, when you guys look at your journal, when you guys look at all this data, you're looking at like a month, right? You're looking at a month. You're looking at maybe even a week, right? You're not looking at one trade. If you go back test and you look at one trade, right, and it's a losing trade, it doesn't really make a difference. If it's a winning trade, it doesn't really make a difference. You need a data set over a longer period of time. So when you take the average trade, it needs to fall into those categories. It needs to fall into your criteria. And if you close those positions early, it's not really falling into that criteria. Hopefully this makes sense. I'll probably take a pause here, but definitely needs to be addressed. Because I think that's the main thing. I think that's like majority of the issues. And this plays into by the way, the small account size, or like the small accounts. It's the exact same thing, because with a small account, you do technically need to have a little bit better risk reward per trade, because you can't scale. So you do need to hold on to those positions longer, which kind of falls into the psychology of holding on positions longer. Everything kind of, forms into each other a little bit, right? Everything kind of molds together, right? So hopefully this is makes sense. I'm going to run through just some questions real quick before we move forward, just so I can get caught up and I don't have like an hour of questions at the end. I'm just going to run through the Zoom first, and I'll jump to the Discord questions, just because I have Zoom up right now. I think, AMD was definitely rough on Friday. I did go through that at the beginning of the session. I'll definitely, I have this recorded. I'll definitely upload it. I don't want to go over it too much again. Okay. Yeah, let's, this is a good question, Nash. How do you prioritize or balance the following when trading? Key intraday levels, higher time frame thesis, relative strength or weakness of the ticker, its alignment with SPY and QQQ, How are you able to determine within the first 5 minutes of market open which ticker is the best one to trade? Definitely, I think personally this is definitely a personal thing. I technically look at higher time frame levels a little bit more than I think Jack and Tony do. A lot of my trade reviews, if you guys watch some of my trade reviews or the YouTube sessions, you guys know that like basically all my trades are like outside of previous day's ranges. They're outside of key levels. All of the trades are off key levels. So that is pretty high on my priority list. There is a case where I will take trades inside of previous day's ranges. Like obviously, like if there's a good setup, I do want to take it 100%. But majority of my game plan, right? This kind of falls into the game plan side of things. Is like if these key levels don't really break or there's nothing that happens, then I typically won't trade them. So it's not really like a priority type of thing. It's like, am I following the game plan type of thing? So that kind of goes into the higher time frames as well. Kind of the same thing. Intraday levels versus higher time frames. Intraday levels, also if you watch a lot of my trade reviews and if you take a look at a lot of my setups, basically every single trade that I take is off 5-day. I don't know if you guys pick up on that. There's definitely a conversation to be had there as well. Every single trade that I take is off 5-day, pretty much. It's all 5-day retest, pretty much. Because when I was learning, this is actually funny. When I was learning the break and retest, and like learning like a lot of these reclaims, the 84% rule, all these setups, like what made most sense to me is just following trend and trading the trend, right? So typically the average retest will be like, right here or even like right here, right? It's very easy to follow. It's like a pullback into the trend. You're just basically buying the dip. That's what it was. Easiest thing to follow. When you look at reclaim setups and reversals, it becomes a little bit tougher. Not that they're bad trades, right? Everybody has their own thing. Don't want to kind of touch on that. So let's just say you have something like this, a pullback. Let's say you don't get a retest, and this is like your 5-minute high. When you take this reclaim, you're technically still inside of some form of range intraday. Sorry, let's just draw like something like this. So like when you look at this objectively, let's just say you don't have a key level drawn. If we take off all these, there's really no like bigger picture here. There's really no overall trend. Like you could say it's uptrending, yes, technically, but I mean, it doesn't make a lot of sense. So all my trades are basically 5-day. So that's kind of my intraday pivot levels. Answering that, how I like prioritize that, very, very, very important. That's pretty high on my list. I don't. It just sometimes it doesn't make sense to trade in those levels. All my trades are basically 5-day or low-day retests. Relative strength and weakness on the ticker. That's a very hard question to answer. Typically, it's not really an intuition thing. I mean, you just look at market open. You look at the first 5 minutes, first 15. Typically, I wait 50 minutes. Before you take a trade, typically you want to wait for at least something to form, right? Intraday price action. You can look at it based off of other tickers. So you can look at what some of these other, like, the Mag 7's doing, or you can look at what QQQ is doing and play it based off that, right? And you can look at these green upload, like Google, like for example, let's just look at Google on Wednesday. Like I think this one's pretty self-explanatory, but when you look at Google, you have like 5 up close candles, first green candles. Look at QQQ. I think Wednesday was pretty decent, but like technically speaking, you do have a ton of relative strength. Look at AMD on Wednesday. Kind of ranging. First couple candles down close. I think Tesla was also decent. Yeah. Couple candles down close. Look at Palantir. We can run through in range. Right? So it's like those are very key aspects. You can look at other tickers. You can look at QQQ. It's not... It's like pretty high on the priority list because... Majority because we trade options. Right? Majority because we trade options. If we didn't trade options, then it wouldn't matter as much, but you do kind of need that momentum. You do need some sort of volatility to get most out of them. I think that answers like some of those questions, which is good to go over too as well. Let's go over yesterday. AMD took 2 trades, managed to narrow miles to -28. Didn't jump in with the third trade. Got scared. Yeah, 100%. Yeah, it's better just to not to trade if you don't see a setup, right? You do not need to take trades every day. Actually, there's I just want to kind of run through something real quick too as well. I'll get to all the questions too, by the way. I'll kind of transition to more of a Q&A style right now, but I do want to go over just a post that I kind of reference. Actually, I reference this quite often, and I think it's definitely a good conversation as well. Let's take a look. So I'm just pulling it up right now. Dan, if you're watching, I don't know if you want me to pull this up. Can you guys? I think in Discord you guys can see this. Okay, yeah. You guys can see this screen. I think that should be good. Should be good. I don't want to run through the entire message. I could read all of it, but if you guys want to reference this, that's cool. This is like the epitome of like you don't need to trade every day, right? If you only stick to your good setups, I think this is 11 trades total, 10 trading days in a month, right? You don't need to trade every day. Wait for the good setups. Wait for those higher time frame breakouts. If there's a setup that you know and that you like, that's when you're going to take it. If it doesn't align with your strategy or your system, or you're a little bit confused, it does. You don't need to take those setups, right? You don't need to take those setups. Perfect example of that. So shout out Dan. That post I do reference actually quite a bit, so I'm glad that we could have that too. Okay. So the immediate retests. This is actually, I saw a couple questions about the immediate retests. There's just a different way to play them. If you really like the setup, it does make sense. Then typically you'll see something like this normally. Like, let's just say you have one candle breakout, and then you have like something like this. This is the key level, obviously. If you have something like this, and you wait for this kind of breakout to enter, this is your entry. You have to play the risk reward a little bit different. Like, obviously you don't have like a high of day setup to kind of like take profit into. So just like at this point, if you take those immediate retests, then you just have to have a little bit, you have to like have some sort of risk reward in mind. Know where your risk is. Maybe you look at the options chart. Maybe you just calculate it based off delta. It really depends. It really depends like where your risk is and what you want to do. You just kind of have to play it a little bit different, right? Most of my trades that I do take off like, the faster retest, and I buy close to low of day or high of day. I just use 1.5 as a reference because you don't have another level to trade into. So remember this scale 60%. Yeah. Okay, that question was kind of answered. Spot on. That's what I'm working on. Is there any way to get the traders live indicator? Yeah, I think it's in the premium announcements. If you go to the premium announcements, the traders live indicator, in accelerator, the information premium. Yeah. Okay. Most of the time when I sell 2 cons, I see them go in the money and leave lots of profits on the table. Yeah, 100%. Yeah, 100% off the 5-minute retest. What is the best entry? Yeah, I think I talked about kind of the 5-minute range, right? I think personally the best 5-minute range setups are something where like you have pre-market like open close to your previous day high, or some sort of key level, so that when you open up and you do have a range, you have like a breakout and retest. Those are typically my favorite ones. But like technically speaking, they're always like high of day retests for me. Those are kind of the best ones. If you, in the end, you fall into the minus 40%, yeah. I'm going to slowly start shifting profits of 1 to 1.5 and 2R, yeah, 100%. Being scared and taking 1 to 1 profits is worse than letting you hit your stop loss because you're not synced to your system. Yes, 100%. 100%. Because, like, here's the thing, like I obviously, like, if the trade hits your stop loss, it is what it is. Like, you take a losing trade, it's fine. But, like, based on the data that you have, if you take X amount of trades, or, if you look at your setups, if you go look at your journal, then you kind of need that to happen, right? Because that's what you're basing this all off of, right? So the winning trades hit your TP, and the losing trades hit your stop loss. If you take off profits early, then your system is not really a system anymore. It's just it just made up, right? Do you think that only waiting for a 1 to 3 risk reward setup versus 1 to 3 final TP, 1 to 3 is conservative? I would say, like, if you have a really solid setup on 3 contracts, yeah, like just do 2 and 1. Like, take off 2 scales, right? Take off majority and then take off the last one. Whatever your key level is. Don't use, like, we talk about risk to reward too, and like there's a good, definitely a lot of good points there. But if you're scaling, which I'm still kind of working on, it's like waiting for like a lot of your key levels to be hit, right? Like if you're trading 3 contracts, let's just say, or even 5. Let's just go over like a quick example maybe. Palantir is not a really good example. Maybe AMD is not really either, because there's no other levels down here. But we can use pre-market for example. Like let's just say you took the trade with 3 contracts. Like you'd probably take off 2 maybe around here, because you don't really have a low of day to take off position. Like you're obviously not going to take any scales off right here if your risk is up here. I think that's pretty self-explanatory. But once you hit like 1.5 R or whatever it is, right, you take off 2. Like, because it's below your low of day, you don't have a target. You're like, okay, 1.5 is my minimum. The next level you're probably gonna just take off one is the pre-market low here. This could be previous day high. This could be previous day pivot. Leave that last contract till whatever key level, and you'll typically get a little bit better winners, right, than losers. Your actual risk reward per trade will go up, right? Gotta get comfortable with living in the unknown, 100%. Can you trade a ticker where you can buy more Yeah, Apple versus Tesla. So I did talk about this yesterday too, actually. If you're trading on a small account, like obviously Tesla's not that great. Technically speaking, there is enough volume on some of these out of the money, right? There is technically some good setups if you do take a couple out of the money. They're a little bit cheaper. There's enough volume versus like Apple. The volume on Apple contracts just not that great. It's one of those tickers where like if there's like we do have, I think in the accelerator we talk about 10K, like 10K volume is decent. Anywhere around there is good if you trade out of the money. Just be careful, like don't trade illiquid contracts, because they're just not going to do anything, and you're going to get bad fills, right? The spread's going to be really bad too. So do you base the scales on percent return or based on the drawing tool? It depends on the contracts too, right? It's not just the risk reward tool. Like this is a good reference. Like this is where you should be aiming for. But like if you know generally how much you're risking per trade, you do want to kind of take that into consideration too as well, right? Like the options contracts are never going to be 1-to-1 with this, right? Like it's never going to be perfect. So I'm just going through some of the last Zoom questions, and I'll jump to Discord. I often let greed keep you from taking profits, holding trades longer than I should. So that's actually kind of the opposite of what I think most people are. I think there's 2 things that most people struggle with. It's like not closing out your losing trades, and then not taking profit on your winning trades. I think most people are in this side of things where like you close positions too early, versus like letting them run too much. So I hesitate to exit because I'm trying to squeeze it at every game, probably due to the USPDT rule. Okay, yeah, that makes sense. Millions opportunities, increase pressure. Well, if you're on a cash, that's fine. You don't have to worry about that too much. This cycle leads back to giving opportunities. Question: what are the better ways, both emotionally and technically, to reframe this behavior so greed doesn't drive my decisions? Profits are taken at the right time and losses are cut quickly. Okay, first off, like just understanding the break, just real quick. I don't want to spend too long on this, but like understanding the break and retest just in general, like technically speaking, the trade should work out right away. Like all the trades that you see from like Tony and Jack and the trade reviews, and even when you look at your trades, like most of them will typically work out right away, or they don't work at all. Like I would say like probably 80% of the trades. Like, yeah, there will be the odd case where you get wicked out and it goes to your stop loss. That's just trading. I'm sorry to tell you, that just happens. It happens to me. It happens to Jack. It happens to Tony. It is what it is. Literally happened to me on Thursday. I think I did have the trade review. I forget exactly where the entry was here. It was like, I think it was about on this candle. Anyways, went basically 20 cents off my TP and then hit my stop loss. Like, it is what it is. You're just gonna get wicked out. You're gonna have those trades, but it's just focusing on like how you actually move on from that and how you play them in the future, right? How you adjust. You do need to have like some sort of criteria. So like emotionally and technically. Emotionally, I think you have to have a longer term outlook, because if you know the trades work and you know how to kind of frame those trades and looking at it from a technical point of view, emotionally, you should have that understanding. You should know when to like enter in, where to take profit. You kind of have to. It's kind of, they both play together, the emotion and the technicals, right? It's like if you truly know that these setups work and that they will present themselves, and you know the win rate will be good enough with a good enough risk to reward, then I think the emotions become less less of an issue, because if you truly know it, comes a little bit. I guess I don't scale too much, but until you got enough bank to achieve 25k, agreed. That's good enough. 4 cons, pop cons. Yeah, by the way, like everybody's scaling strategy is a little bit different. Like Jack and Tony definitely scale a little bit different than me. It's just like when I did grow the small accounts, like when I had like 5k or that account, or even less than that, like it did fluctuate. Like it wasn't a linear path, by the way. Like your account's never gonna be linear. It's never just gonna grow like this. You're gonna have the ups, you're gonna have the downs. It's gonna look like this, right? Based on my scaling strategy, like, you know, a while back, I've adjusted it a little bit. What I think makes the most sense, but technically, you can have different than me. I just think, you know, majority, like bottom line, like with scaling, by the way, just bottom line, like majority of your trade should be the scalp, like the position, and you know 20%, you know, 10% should be the runners, because you give yourself the option, like, because what we teach is like intraday scalping, right? We don't technically have too much on swings or longer term positions, but if you have the option and it's relatively strong and it still has momentum, there's no reason to close out the whole position yet, right? So you give yourself that option for those big green days. That's just the bottom line. Like, you know, I think that anyways. Maybe you have like a 25, 50%, 30% scales. That could work. Just make sure you run the numbers, right? Like, just go through your numbers, go through your risk to reward, go through your win rate. At least look at it from a technical point of view. We can maybe touch on that eventually. My scaling and Tony's scaling, like, as long as it works for you, then 100%. Do you think it's possible to grow an account by just trading 1 to 3 contracts at the start, then gradually? Yes. Like, I mean, realistically, like, your account should, like, technically grow naturally if your wins are like in an ideal perfect world, because obviously this is not the case for a lot of people. Like, ideally in a perfect world, you should have like 1% risk per trade of your account size, like, technically speaking, maybe 2%, and then your win should be like at least 2 to like 3% at least, right? And then naturally over time your risk will increase and your profit will increase. That's the main idea. Like, you, like, technically speaking, like, people talk about like depositing more money, scaling up, like, at the base level, it should kind of happen naturally, I should say. Like, it should, if you're still in the stage where like your account's pretty stagnant and you're just kind of like figuring out your setups and where you trade best and all that, that's fine too, right? You don't need to, like, if you're not gaining this on your account, right, like, do not worry, right? That's why we say, like, you know, don't trade with money you can't afford to lose. Don't trade with Um, like teach it. Like picture this as a learning thing, right? It's not gonna become over. Like I've been trading for like 5 years. I didn't really make that much money trading until literally last year, this year. The first like profitable month or like couple months I had was like 3 years into trading, and it was with crypto, right? It took me. I didn't have resources like this as well, right? It was definitely not like this where we have basically like pre-markets every day, live trading every day, trade recaps, live sessions, right? Like I didn't have all that, so um, definitely Shadow Jack Tony. I have Shadow Jack too, by the way. Puts in a lot of work. Literally shows up every day. Had his first 100K a month, so Shadow Jack. W Jack. Sad that he's not here today. Shadow Jack. That's super cool to see. Super cool to see, by the way. Like I've been watching Jack and Tony for a long time. Jack's first 100K a month, dude, insane. When you take immediate retest with no, that didn't have some sort of key levels. Like I think if you take the immediate retest, you just want to have like a decent thesis at least. Like if you have a whether it's like a higher time frame breakout, whether it's relative strength, whether you have to have like some key aspects for the immediate retests, that makes sense, right? Like it doesn't have to be one specific thing. Yeah, you can buy a higher strike on OTM on Tesla. Like it's like only. I'm just gonna say like, as long as it has really good volume, like as long as it has good volume, you should be fine trading like anything OTM. Just understand that they might not move as much, but technically speaking, it's a little bit easier, right? Especially for small accounts. Do you use limit or market orders? Yeah, I use market orders. Win rate is 60%, 60 to 70%. But my P&L doesn't reflect that. My price winners are smaller than others. I have to take a look at your trades. Like that's the thing. Like everybody always says, like how do I, like I have a decent win rate, but my losers are bigger than my winners. Like it's all about risk to reward, right? Like that's the bottom line. I have to look at your trades. Like I have to actually look at the technicals, look at the contracts, like what actually happened at the time. That's like the easiest way to do it, anyways. That's where I'm at now. Start with 3K account, growing it to over 5K over 2 months. Yeah, like no, your account will never be linear. You're gonna go from like 5K to 3K to 4K to 7K to 4K again to 5. Like it's never gonna be linear, right? It's like you kind of have to understand that. When I'm trading with 5, how do you suggest scaling? Mostly, I noticed that the last half the cons will be a small loss. Yeah, so on 3 contracts, typically this is what I used to do. I used to do 3 and 1-1 for the most part. This is gonna kind of be your reference. I would say like honestly, majority of it should be like a 4-1. Just make sure you have a good risk reward on your first scales. You can do a 3-1-1 on the good setups, like on like the A+ setups, or like even just like in general, like really good trades. Do this. Yeah, exactly. Like with a $1,000 account, risking $10 to $20 is really tight. Yeah, 100%. No, that's why I said like in a perfect scenario, it makes sense, right? In a perfect world, it does make sense. But it's the same thing though. Like if you're risking, like let's just say 3%, if you're risking like $30 a trade, then your average win should be like $60, right? It's not going to be like exactly 1 to 2, but hold Discord is gold. Yeah, there's not very many places like this, to be honest. Where is Jack? I don't know actually. Usually he's here every Saturday, so I'm not sure. I'll send him. I'll maybe he'll probably update you guys. He'll probably have something. Okay, I went over all the Zoom stuff. Let me run through the Discord chat real quick. There's definitely a lot of messages in here, so. Okay, I gotta scroll up. Yeah, I can see. Yeah, the IVs were nuts yesterday. AMD took 3 shorts off Nvidia Thursday, only beat stopped out in all of them. Third one was mental fatigue. Yeah, like Q's, like I honestly do think that like yesterday it was just like if you try to trade Nvidia yesterday, it was definitely tough. This is Friday. I feel like I'm looking at a different chart than yours, but maybe not. Yeah, this would have been a little bit tough. I did think it had decent relative weakness. I'm not sure if there was many good setups technically. I'm trying to look. I don't know. Maybe Jack can, like, he'll do a trade kind of recap. I'll get him to do like a video or something just to make sure that he has his context for his trades. Like when I look at this, I think this is just your previous day low. Let me actually load up the indicator real quick. Let me just take a look at this real quick. Yeah, any shorts below your previous day low are good. I don't really like this. Like, if you play your key levels and you play like context trades more so than like your overall strategy, then this might make sense to take shorts off this. It definitely does look like it makes sense in hindsight. Obviously, in hindsight, you can always look at those. But like, in terms of the break and retest, like this is like 20 minutes, right? There's not really much momentum. We actually made like a lower high, or sorry, a higher low here. So, don't really love this. I get the context, like I get the previous day low rejection, so like that makes sense. I'll have to get Jack to look at some of those. I don't think I have a crazy amount of time to run through these. Yeah, IVs have definitely been juiced up. Yeah, you can look at VIX. I mean, obviously Nvidia earnings kind of screwed everything up, but what's the VIX at right now? Let me just look at the daily. Yeah, it's spicing up a little bit, which is good. We want volatility, but it does come at a price. Right? Just make sure that your risk is always fine. Yeah, seems to be picking up a little bit, which is all right. All I hear is Hayden telling me about more contracts to make this trading. Or no, don't do that. Don't do that. I trust me. Like I've done it before. Like you can make it work. Like you don't need more contracts. I'm telling you right now. You don't. I'm saying that real straight up. You don't need more contracts. I'm telling you that right now. Trust me. The more size you put on, the more emotional risk you're gonna have. Like it just doesn't make sense. You can adjust. You can have your own kind of system in this. I promise you. How did you decide to start trading more than one con? Was it based on? It was kind of just basically based on risk. It wasn't realistically, like everybody asks, like, is there like a kind of like a tipping point or like a aha moment in trading? Like there really isn't. Over time, like just have this. I said this yesterday too. Take this as an example. Think about where you were in your trading like 5-6 months ago versus now. Like you're not really looking at this from like an objective point of view, but you would say like, wow, I do know a lot more. I have a lot more experience in the markets. It's never gonna be like this like one day or whatever. Like you're gonna be like, let's size up, right? Like it just over time, based on risk in your account, it makes more sense to take more contracts. It's never really gonna be like, you know, I'm a good trader. Let me deposit more money, right? Just curious if you, Jack, Tony, typically wait for the 1 minute candle to finish before entry. Typically what you want to do is like this is like pretty much every trade that I take is one of these two things. What I want to look for anyways, let's just kind of run through a drawing real quick. Like typically most of my setups, I want to see like at least one displacement candle. So what that means is just like a candle that is fully outside of this level. So not a wick into it, right? This kind of confirms the breakout. Because like realistically, you could have this and then something like this happen right after. So I want to see typically something like this. And then as for like the pullback, you don't want to see like a massive candle close into it, right? If you trade specifically lines, like or specifically just this tool, it's gonna be a little bit tougher to kind of like navigate those. That's why I kind of draw like those little boxes because I give it like a decent amount of room. Just so you have something like this. Typically, what I like to see, this doesn't always work out, is some sort of breakout on the lower time frames, like a 1 minute breakout of like this candle. Best thing is to wait like 30-45 seconds. I want to say like around there, right? Because the candle can reverse, right? It's never gonna be 100%. You can wait for the candle to close too. If you do want to wait, typically you might have a higher win rate. but your risk to reward to high of day is going to be a little bit less. It kind of depends on how you want to play it, right? Kind of depends. They do both. Like we all do both kind of. So what percentage of your account would you suggest for regular trade? You should never really think about it in those terms. You should think about it in how much you're risking per trade. That's like the main idea. There's a couple ways to do it. This is something that I changed to help me more than I thought. My greens were a lot bigger and I could hold a bit longer. I took your advice not to scale at all, so on 2R, which has been very helpful. Yeah. Honestly, a lot of the people that I've been talking to in the coaching have been doing pretty good recently. Actually, like with like their like the smaller accounts and the scaling, they can also chime in. Like if you guys have talked to me and you guys have seen some success, like chime in. I know Orlando, Jan, like a lot of you guys join in quite often. If you kind of join up religiously, then obviously it's gonna help over the long term. So if you guys have stuff, or even David, yeah, if you join every day, it's good. I struggle with ego. Yeah, the ego thing is crazy. Like there needs to be a like you can, let's just talk about this for a second. You can be right and lose money, and you can be wrong and win money, right? Like trading is not like a right or wrong thing. If you show me an entry, here's the thing. Like if you show me your thought process, your entry, the reason why you took the trade, right, and you win that trade or lose that trade, I will say, hey, that's technically a pretty good setup. Versus like if I look at it objectively, for me, I'll be like, that wasn't a good trade, but like who's right or wrong? Nobody's right or wrong. It's just kind of, your context, your strategy, your trades, right? So it's tough. Like the ego thing is, like you want to be right all the time, but realistically, nobody's right or wrong. You're just risking based off of what you see objectively, right? It's like that's the thing. It's like you can't have this. Very great observation on the risk, but I always have the doubt. I think the risk and stop loss is subjective to the trade. Yeah, it kind of is. Yeah. Basically, like what you want to do is like see where your risk is on the underlying. Yes, but then you can look at the options chart. You can do a quick calculation. There's a ton of ways to do it. Everybody kind of has a different strategy in terms of like how they calculate the risk. It could be you could have something like, I know some people like to have an exact amount per trade. Like they do it based on not only the chart, but also just like risk per trade, like the exact same amount every time. You could do that. Just be careful because like overall trend, like technically speaking, like we do trade based off technicals, right? So it's like you don't always want to trade your P&L technically. If it works though for you and you like it a little bit better, I'm not gonna say it's the worst thing, right? Best explanation for risk reward, how to reach profitability. Yeah, 100%. I go over this quite a bit. It's honestly like it's an interesting conversation always. So I'm just going through. I'm at like 10:35 in terms of the Discord chats right now. Our sessions with you have been enlightening. Realize that I'm chasing the money, not really building the patience for long term. These are all making sense. 100%. 100%. Yeah, I'm curious to see what trade Jack took. I actually don't know. I joined in technically like later into the session. I joined in like 10 something yesterday, 10:30, 10:15ish. Typically I don't like at this point I don't join the live trading really during the market open. I always I try to always jump in like closer to the end of the session just to get context to see what they did. At this point, if you're learning and you're like kind of trying to get better as a trader, like 100% go to all the live trading, right? Go see the context. Honestly, like Jack and Tony are kind of like wizards in terms of the actual like calling out moves and candle closes and stuff and whatever, right? Like it's like they're pretty nuts at that. So it's always good to kind of learn from them. Performance, but yeah, actually I have a interview coming out with Tony. I think like we recorded actually quite a while ago. I'll see if you can send that over because I go through all like the kind of the journey, right? The journey and the performance metrics and everything. So I might have to just get him to send me the recording and maybe I'll edit it. It's a really good video. So key level is 15-minute or 1 hour. Generally, it's 15-minute always. In my opinion, this is personal preference, but like if you're trading on the 1 minute, typically like you want to, trade your key levels close to the 1 minute, but you also want to have this like higher time frame context. So like you could draw out like levels on a 5 minute. It's a little bit, it doesn't make a whole lot of sense just because like you'll probably have a ton of levels. Then I kind of just like look at 15-minute. It makes the most sense because like you want to be as close to this as possible, with also having like I don't know how to put this really into. I don't know how to make this easy to understand. Like essentially, you have your daily levels. Yes, like you can mark out your highs and lows of daily candles. But if you're trading the 1 minute, it's like you're gonna be a little bit iffy on those, right? It's like maybe they're good, maybe they're not. I like 15-minute zones just because I trade the 1 minute, so it's like kind of in between. It's like not too high to the point where like it doesn't make any sense, and it's also not too low. That's kind of, I don't know. I just always have done 15-minute, so I mean I could try like 1 hour. Maybe I'll do like a week trading of like 1 hour. Trading 2-3 cons, planning on just taking full exit at 1.7 2 hour, kind of making mechanical system for position size. Yeah, 100%. Yeah, do that. I always have some sort of like criteria, like always build because that's how your journal and your back testing works, right? Like the context is good. Like if you take some trades outside of your system, like generally you're not gonna have good data to go off of. So you do need to build some sort of criteria and some sort of like plan. Whatever it is, it could be anything, anything that makes you basically think in terms of, I guess, like trade to trade versus like you need to have this like longer term outlook, but that comes from like every single trade, and you do need mechanics for every single trade. You do need some sort of like criteria, right? We can't just like enter trades based off whatever. We can talk about like higher time frames and everything. Yeah. But like those moves maybe be more aggressive, right? That's different than just like actually entering a trade that doesn't make any sense at all. Let's see what he says. I've heard from Jack, Tony Neto. I'm curious about sizing up. When do you think sizing up is wise? Like, I think we talk about like sizing up is a hard conversation. Because like generally, for me anyways, over time it just kind of naturally happens. Like you just risk more of your account per trade because your account technically gets bigger. That's kind of my outlook anyways. Like maybe Jack, Tony, Neto, maybe they have a little bit of a different outlook. Yeah, we can maybe talk about that a little bit more. Maybe I'll ask Jack about that, because like technically speaking, I don't think that you should, like, this is the problem, is when you make a decision to like size up, that is like a very big step in a singular direction, and if you lose a couple trades, you get like, you're just like, why did I do that? It's a little bit tough. It's a little bit tough to say. Let me get a drink of water here quick, and then I'll go through some of the last questions here. Okay. If you think scaling 3-1-1 is better than 2-1-1, can you say why? Yeah, I can 100% explain why. Essentially, what like majority, like what we teach, right? Like everything that we teach is technically like intraday scalping positions. So like majority of your trade should be a scalp position, in my opinion. This is just solely my opinion. So like majority of your trade, obviously 3 contracts you're taking off. 1 maybe you take at a break of high of day. Maybe it's a key level, and then the last one you kind of let that one ride. When you take off 2, you're taking off less than half of your position. So it's like it's a little bit like when the trades reverse, right? Like let's just say you take profit in both scenarios. If you take profit on those 3 contracts, when it goes back to break even, you're still going to have a green P&L, right? Or even if it goes to your stop loss, you're still going to have a green P&L. Whereas with 2 contracts, it hits your targets, it hits your scalp targets, and it reverses, and you actually take a loss in the trade. So it's kind of that reason. There's a lot that I can go over, but if you get real technical, but how do you put a stop loss in IBKR when you set your profit to loss ratio in TradingView? Well, I mean, it's a completely different broker, or sorry, it's a completely different platform. So like you literally just have to, like you can do it based off the options chart. Like I mean, most of the times I'll use market orders. Technically speaking, I mean it depends what you're actually using, what order entry tool you're using too. Like if you're using the standard options trading one, then it's different than like what Jack and Tony have in the videos and like the actual like IBKR setup. How do you put? I'm using buying as many contracts as I have in cash. I've been a roller coaster. I'm only recently being okay with holding contracts longer. Yes, 60 to 70% win rate doesn't mean much if you can't hold it. Yeah, 100%. If I can take the trade, lose this amount, and still feel neutral. Yeah, 100%. I 100%. I did blow my account, taking more contracts, trying to make quick profits. Yeah, 100%. Like it's actually like, you will like just gonna be honest. Like humans really only learn the hard way or the harder way. So like you will just overtrade. You will naturally have FOMO. You will naturally maybe blow accounts. That's why we're trying to keep you away from that. It's just like sometimes it will just happen. Like you have to experience those things as a trader, but the goal is to not do that, but also like learn from those mistakes. Like learn from it, right? Like you have to kind of go through that process of overtrading, FOMO, revenge trading, whatever it may be, to know that it doesn't work. It has never worked. It never does work. It will not work in the future. So interesting point of psychology there, right? You kind of, I think most traders have to go through that at a certain point, right? If you're a brand new trader and you like start off on the right track and you join in here, then like yeah, you'll have a way better time. But like technically speaking, if you're on your own and you loaded up a broker and you tried to trade, I mean, good luck. Good luck. Contract size in my playbook, need 10 full trading days. Yeah. No, that's solid, Don. That's solid. I sent you a pretty good message in Traders Lab too yesterday. Put some thought into that one. So hopefully you got to look at that. Apple. Yeah, Apple's an old granny. Yeah, like honestly, Apple's just not. I actually, this is hilarious. Like I literally put it to the bottom of my watch. I literally took it off the watch list and like every single day after I took it off, insane move right at Marco. Literally every single day since I took it off. It's like I'm never looking at it again. I'm just leaving it. I'm leaving it on the bottom of the watch list. I'm never looking at it again. That's honestly. Can you? Yeah. Let me go over to Zoom. I'm trying to find where I'm at in the Zoom, then I'll probably end off after some of these questions here. Trying to figure where to end off. Okay. Yeah, honestly, like I might do like live trading here and there. It's just like it's a pretty big jump. I'm not gonna lie. Like it's not exactly the easiest thing. Especially if people do like obviously, you have people that will like take same positions, right? And I get it. It's like you have to manage your own risk on your own, but it is like it is kind of a lot of pressure. So maybe easing into it. Like I do technically post like some trade ideas, and I do the game plans, and I'll do trade reviews, and I'll kind of walk through some of the thought processes, like in terms of like when I'm in trades and like what I'm thinking. Let me load up this. Let me load this. Yeah, like sometimes I'll just like walk through trades and everything, but I mean typically, live trading is definitely tough. Like it like I don't know how Jack and Tony do it. It's honestly, I don't know. It's like that's a huge leap. Eventually, maybe. We'll see. Right? It's hard to answer that one. What is the question you would ask the early trader? when you traded with a lot less experience if you knew you could get? That's a really good question. Damn, that's actually a really good question. I mean, you have to look at your goals, right? That's the main idea. Like, look at your goals. Like, look at what you're trying to do with trading. Like, why are you trading in the first place, right? Is it to make $1 million in the next month? Like, obviously not. Like, look at your goals on a longer time frame. Like, don't try to rush it. Like ask yourself, like, what do you actually want from trading? Like, on a long term, right? Never, like, ask yourself, why did I get here in the first place? Like, why am I here? Right? Why am I here? Because, like, it becomes very frustrating when you trade for X amount of time, whether it's a year or 2 years, and you don't see any sort of consistency or whatever. Like, you have to rely on that, right? And you have to look at it from a long-term perspective. It's like anything. Like, you go to college for 4 years or university for 4 years, and it takes you that long to learn, be consistent, get have more knowledge and be consistent in what you do. And then you go into the workplace, and like, when you start a new job, it takes you a long time to get familiar with everything. When you start doing anything, it's going to take time, right? Anything that's worth something is going to take you, obviously, a little bit. Like, gratitude only makes sense when you actually, it's tough to achieve, right? It's not. So that's kind of the main thing that I would ask, and just make sure that, like, you have some sort of outlook on the longer time frames. Time frames. I gotta stop. I gotta take a break from trading or something. Literally just referred to long term as time frames. What if you're taking a SPY instead of the Mag 7 tech name so you can buy more con scale better? Yeah, like, so it's like, if you're trading 0 days, like, I'd be careful. Like, more contracts doesn't always mean, cheaper contracts doesn't always mean less risk. More contracts doesn't always mean better. I'm just gonna say that straight up. Typically, I know a lot of people trade SPY and Qs like 0 days. 100%. Like, you can do that. Like, you can 100% trade 0 days, and you can make it work. Just make sure that you have some sort of plan. Make sure that you have some sort of criteria. Make sure that you're, like, actually, moving forward from there, right? Like, have something. Like, have something. I can't really answer that question. It's very tough. Like, everybody's different. Everybody has kind of their own style. You can trade tech, and you can trade one contract. You can trade SPY and Q 0 days, and you can trade 3 contracts, 4 contracts, right? It really is, like, it's hard for me to answer that question, to be honest. Jake, you posted about that yesterday in the student wins. Yeah, let me take a look at this. 0 for 2 today. My first red day in almost 3 weeks. Although I would have liked to win my trades, ended up green, but I'm pretty fine ending the Friday red 0 too, because ultimately I fully accept the risk putting in a trade. And when it does not play out in my favor, don't feel that much negative emotion, because I never had the expectation of me winning in the first place. I just knew that the trade was part of my edge, had a probable chance to win, but at the end of the day, I'm completely out of control of the outcome. This is good. I'm completely out of control of the outcome. That's kind of the main thing I take from this. You can never, nobody predicts the market. Nobody knows where the market's going to go. Not even the algorithms, not even the hedge fund. Unless you're an insider, basically, like, you don't know what's going to happen. Nobody does. So, like, you just have to accept that. Like, it's either going to work or it doesn't. And most of the times, based on your edge and based on some of the setups, you have that, right? Focus is on being the best loser. Like, like, a lot of people ask me too, like, this is a very good point as well. Very, 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 very good. Focus on being the best loser. Here's the thing, is most bad trades, like, most losing trades, in my opinion, that a lot of people send me, are bad losers. They're not good losers. Like, that's the main idea. Like, if you overtrade and you revenge trade, that's a bad losing trade. If you took a trade within your system and it failed, that's a good trade. There's no such thing as a good or bad trade based off P&L. Never. Like, obviously, yes, like, the more profit you make on a trade, like, you can look at that as, like, it is a better trade. Sure, that's really never going to get you anywhere, though. That mindset's really never going to get you in. You could FOMO long into Tesla contracts and they go 200%. Is that a good trade? No, not at all. Can you do that every day and repeat it? No. So it's like, you never want to look at that. Focus on being okay with losing good trades though. Be a good loser. Don't, that's the main idea here. The best losers win because they're able to learn from any mistakes, make them beating themselves up or worsening psychology. Yeah, 100%. 100%. Very good point. Very good point. I love that. Would you post this video? Yeah, 100%. I'm going to post the video. I'll probably upload it just in like, it's probably going to take a little bit to, actually the Zoom will take a little bit, but I have the OBS recording, so my goal, hoping they'll fire my boss night trading with me. Looks like he might fire me first, AMD. That's this week I say 1 trade per day. Yeah, 100%. Everybody kind of has their trades per day, as long as it makes sense, right? Like over time, I think naturally you're just gonna take less trades, in my opinion. At least that's what happened with me. Sorry, I just got a drink of water. That's what happened with me. Is like I kind of saw that most of my good trades were just like breakouts, higher time frame on a higher time frame levels. They were 100% like all high day retests. Overall trading with the trend, had some display. Like naturally, there's gonna be decent setups every day, but like you again, I kind of if I go to Dan's posts in the testimonial chat, like you don't need more trades. It's better to honestly not trade. It really is. It's better to just stop out. But yeah, almost 11:30. I'll probably jump out of here. I will talk to you guys either Monday. Maybe I'll get Jack to do like a quick recording. I'll talk to you guys Monday. If you want to, obviously like the coaching, if you want to book in, for sure do that. I do have obviously the Traders Lab 1-to-1s next week. I might adjust some of the times on those just so everybody can get a chance to jump into them. But yeah, I have the 11:30 sessions every day on Discord. Do some trade recaps. Give some good ideas. I always go through a kind of a recap of the day and then go over some of your guys' trades. Feedback is very important, right? Like we can always show you the ropes when it comes to you actually going to take trades and you going to execute on your own. Then 100%, like it's like a different ball game. So like that's like what I kind of want to focus on in those mostly, right? If you guys are in Traders Lab, always send stuff to the inner team chat, right? Send in trades there. It's the main idea. Yeah, I will talk to you guys Monday. Potentially Jack will kind of upload a video. I'll reach out to him. I'll see what he's doing. And yeah.